The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we look to close out 2024 and look ahead to 2025, what can we expect in the grain and oilseed markets? What are some things we need to keep an eye on here as we close the books on one year and move to the next? Let's have a conversation about it. Joining us now, Steve Nicholson with Rabobank. Steve, it is great to talk with you again. Thanks so much for joining us here on the program.
Great, it's great to be here. Good to see you too, Jesse. In a nice part of the year. So
absolutely. Well, and a Merry Christmas and a happy holiday season, a New Year to you and yours, Steve. And
absolutely,
we look at these.
To you.
Yeah, I was going to say we look at these markets, and I feel like this is always that time of year where we reflect on the markets and the ag economy, and everyone's reflecting on all aspects of their life, right? During this time frame, and let's look at these markets a little bit. Obviously, it's been an interesting year, a tumultuous year, and it feels like some of that's going to continue as we get into 25. Your, I guess, just overarching review of 2024, Steve.
Yeah, I think you summed it really well. I mean, it was a tumultuous year. We came in, with pretty dry, not knowing what we're going to get. Still planted a pretty good sized crop and got a really good crop this year, and we got record corn yields, which we've never, a brand new record, which over 180, which was, phenomenal. But I also would say, we kind of ended, if you get toward right before harvest, we kind of put a bottom in this market, and it looks like we found a bottom in this market. And I think, but at the same time, the market has basically been a flat line for, the last 4 to 5 months. And I don't think that that's going to be anything different in 25 as we go forward. We are going to see ups and downs. We're going to see some volatility, but for the most part, I think we're likely going to trade in a fairly narrow range. The one exception I would say that when I look into 25 is, what is the soybean market going to do? You've got a potentially monster Brazilian crop coming on, and that could be a bad thing for the soybean market. Plus the other things going around the soybean market when we talk about U.S.-China trade relations, and that could be, so you really have to be, I think, on the defense on the soybean market for sure, just because of everything flying around it right now. But I do think, go ahead. But I think the other thing is just, there's also a year of tough margins, a second year of tough margins for producers. And I don't think 25 may find maybe a little brighter spot. I don't know that we'll find the end of the tunnel by the end of 25, but I think we kind of, again, stabilize here a little bit.
Well, and to that point, the tighter margins is kind of that cost price squeeze we've talked about all year long here for grain farmers. And to your point about that monster soybean crop potential here in South America coming online with their harvest, ideal weather there, you couple that production with, American farmers good at their job, a lot of production this past year, soybeans, corn, et cetera. And it just feels like I've seen some folks comment about, we've had just a lot of overproduction that's kind of weighed on the soybean market in particular, Steve.
Yeah, particularly the soybean market. And you look at, the good thing is the demand from at least the vegetable side of the product side is very strong. That's a helpful thing. But you look at soybean meal, you look at livestock numbers, it's hard to get very excited that you're going to see a lot of uptick on the meal side. And just parenthetical, we'll come back to the grain side a little bit, is that you look at the disease pressure from avian influenza on layers and now on the dairy herd. And now I heard today that we've had the first person actually get it seriously. And so you have to be a little concerned about the meal side. But when you start to look at corn and wheat, I would tell you we're just maybe a little that's a little happier moment. You see stocks to use ratio, the fundamentals of both corn and wheat have a supportive, tone to them. Stocks to use ratios both domestically and overseas are going down for both corn and wheat. You wonder about the Brazilian crop in 2025 on the corn side, because the soybean crop got planted a little later. You're planting that crop in a little less favorable mode. And so you have to be a little more friendly corn. And if you're friendly corn, you're likely going to be a little friendlier wheat as well. The other thing I think that the USDA has acknowledged in both corn and the wheat markets, both domestically and globally, is those stocks have continued to contract for the 24-25 crop year. We started 2.2 billion bushel carryover in corn here in the States, and now we're just above 1.7. So we have found, we'll say the glass half full star, we have found a 500 million bushels of demand that we didn't think we had, a short few months ago. So there are some things that I think we have to be aware of. It potentially gives producers opportunities to market at break even. I hate to say that, but at break even levels, maybe even a profitability, but you're going to have to be on top of it. You can't just say, oh, it's going to go up. You have to manage that process.
You mentioned finding some of that demand. We're going to have a very key January WASDE report here in just a little over, a couple weeks. And so one has to wonder, could we find even more demand on that January report, Steve?
Yeah, I think we could. The export numbers, if you look across, corn and soybeans, even wheat, have been very good. Now, I think there's some reasons for that, and we'll come back to that. But I do think you could find some a little bit more demand on the export side that, this happened before the last time, after the December report. And I also think when you look at, we'll set aside the avian influenza issues, but you look, you were starting to see a little bit of uptick in poultry, certainly in broilers. We're certainly seeing that market be very good. We're also seeing the swine market showing a little bit of life as well, and showing some profitability as well. Beef is a slow burn if you have it from the rebuilding, but that demand for feed, and when we have cheap corn prices, what do we do with them? We feed it. So I think there's a reason to believe that we'll have that. The crush margins are good. Crushing is good in the United States and Canada. If you want to look at canola as well, you have very good demand in the oilseed market, and I think that crushing will continue to increase as the year goes on. So there are some things that I think we can be helpful for. The one thing I am a little concerned about as we go into the new year, we've had such good. Are we front loading this export demand because of the fear of tariffs and what that could do as far as disruption of trade, costs, and all those sorts of things? And so I worry about, as we get on the backside of January 20th, do we start to see exports start to kind of trickle off? We expect some of that normally because of soybeans and Brazil crop coming on, but do we start to see a real drop off in exports because it was so front loaded this year versus previous years? But if you look at the seasonality in corn, you've got a little dip here, and then you move up during the summertime, partly because Brazil runs out. And this year they have very low stocks, potentially just have a normal crop this year. So you could see, again, corn be a little bit, U.S. corn exports continue to be strong as we go into the back half of the crop year.
I'll add to your tariff thoughts here as well, a high U.S. dollar. You combine both of those, and even in normal trade relations, a high dollar is going to be tough on grains and oilseeds. So if the dollar stays strong, coupled with tariffs, could it be a double whammy, Steve?
Yeah, absolutely. I mean, if you've got, and I'm going to add a third whammy to you. When you start to look at, some of our major customers, and you look at currencies around the world, they've depreciated against the dollar. And so that, I hate to say 3 strikes and you're out, but you've got 3 strikes there against you before you even get out of the farm gate or into the rail car, into the barge. So I do think that's a problem. And then you look at what, as we tape this, the Fed just came out and said, maybe not as many interest rate cuts next year. So you keep U.S. interest rates a little higher than the rest of the world. That goes back to your initial comment, keeps the dollar a little higher. And so you've got a lot of things in the mix right now that kind of work against us as an exporting country. So I think we have to be aware of that and be cautious of that, and think about what does that mean, and how do we stay competitive in the world? And that just keeps downward pressure on prices.
So how do farmers manage risk going into 25? I think there's so many unknowns that it comes back to having a strong risk management plan and knowing your costs and break evens, et cetera. I mean, talk about that a little bit. How do we manage this risk right now?
Yeah, and you're exactly right. This is not a time to take your foot off the pedal and say, well, I'll come back to this after the holidays, for example. Or I'm going on vacation in January, I'll come back and deal with it in February. first of all, you have to be paying attention every single day. Also understand where your risks are. What is the cost of production? And farmers say, well, that's a hard one to pin down. And I said, okay, so let's step back for a minute. You think about what you're doing right now on the farm. You're buying seed, you're buying fertilizer, you're buying chemistry, probably not buying new machinery, but you're also, getting your land rents lined up for next year, all that sort of thing. You're locking in that cost of that crop. So that's the cost side. But have you done anything on the revenue side? And the answer is probably no. Now, there's some people, I applaud them for doing that, but it's the classic, it's like a Texas hedge. Well, I've got one leg hedged, but I don't have the other leg hedged. And so I think you have to think about, it's not about that, it is about dollars per bushel, but it's also about revenue. How much have you put out, and what revenue can you bring in to offset that cost? And so, that's really important as well. But I also think, you are in a carry market. If you have storage, you have the advantage to look at that and go, okay, what does it cost me to carry that crop or store it into, let's say, June? It's a ways off, but you may want to think about March and April. And not that we want to quibble over the time period. And say, okay, well, it only costs me X amount a month, so much a month to store it. The market's paying me X plus 1, then there's an option for you, or an alternative to marketing that crop rather than just marketing it when I want to. But as I always remind people, you say, oh yeah, it'll be better when I get there. You've got to execute against that. You can't say, oh, it'll be that cost when I get there. So those are things to think about. It's also the challenges. A lot of people will sell the crop because they want the cash in the bank, and that's a perfectly legitimate reason. So you could pay bills and that sort of thing. You could buy that crop back, whether it's on the futures or the options market, if you have a view that it's going to go higher. So there are other alternatives. There's other ways to skin this cat, but this is not a time not to be paying attention just because it's low, because you're going to get that volatility, and we've seen that already. I don't think that's going to go away in the first year. We've seen volatility the upside of that trend range, and we've seen volatility the bottom range. And so on the seller side, as a producer, you look for that upside range and go, oh, we're at the top of the range. Maybe I need to sell a few bushels there and move on.
Good thoughts. Steve, anything final you would mention or reiterate to folks here as we close it out today?
Yeah, no, I think the one thing I would say, and we talked of this right off the top, is, there was a lot of volatility, a lot of uncertainty in 24, and I don't think that that's going to go away in 25. We've seen that here at the end of the year already. A lot of changes coming, politically. A lot of changes coming in the government in 24 for this year. And also we've seen a lot of upheaval globally. And I don't think that's going to go away in 25. And so that means a lot of volatility in markets. Yes, that gives people a lot of indigestion, but it also gives you opportunities. So don't forget about looking at that as an opportunity when markets go up or go down, to take advantage of them.
A lot of great insight. Steve Nicholson with Rabobank, thanks for joining us here, and I'll wish you and yours again a Merry Christmas, Happy New Year, and we'll talk to you sometime in 2025.
Thanks, Jesse. Yeah, Merry Christmas, Happy New Year to you and your family and to all your listeners. So we'll talk to you in 25.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.